Because maybe some people are not familiar with the term venture capital. What distinguishes like VC?
There are people that basically, let's say that you want to purchase a shopping center, right? And then, there's a historical, number of tenants in there, and they pay X number of dollars per month, and that turns out to be annual revenue minus expenses. And so the investors basically say, okay, we'll put up, like 40% of the cost, because, you have anchor tenants, national tenants, depends on the mall. So that's a traditional investor model. And that can apply to a lot of industries or a lot of things. When venture capital comes in, it's like, hey, I invented Bitcoin. What do you think? Like, you want to put money into that? And then you tell a VC fund, you say, what is Bitcoin? That's when venture capital start, right? When you have a new idea, a new concept, or something that maybe does not have a market presence yet. Okay. And then, these guys are saying, you know what? You're right. There'll be a need for your product or service in the marketplace. We'll roll the dice on you.
So if they bought enough shares, would they have any kind of control over the company?
You see, it all depends. So in other words, you could have basically profit distributions and have 80% Jeff Bezos, 80% of the profits going to the VC funds or to people like you, me, and the VC funds, then 80%. But he's protected himself as the CEO of the company to still steer that ship. He's still the captain.